The one thing to note about this is that just because you get really overbought, it doesn't mean you have to have a correction. It can mean that you can just have a long period where the market really doesn't do a whole lot. In other words, that upside to the market becomes a bit more limited. And that's kind of where we're getting right now. Again, we're kind of pushing up to this very high level. Market is advancing, but it's having a tough time advancing. So that's that overbought condition kind of weighing on the market because buyers and sellers are pretty much matched here. But here's what you need to know before the bell this morning. Guess what? Market set another new all-time high yesterday. Once you this is always funny because every day the market's an all-time high. You know, we get it's the fifth all-time high in a row. Well, yeah, once you've set the first all-time high, any day you go higher, it's going to be a new all-time high. So it's the fifth all-time high out of 6 days. Okay, well that's fine. Yeah, markets are going up. You know, as we've talked about here recently, markets are getting pretty overbought here. But again, we still have buy signals in place. They are very overbought on multiple levels. The market is overbought on multiple levels. But again, that certainly doesn't, dissuade people from chasing stocks. Once you have momentum behind the market, that can certainly continue to drag on here for a while longer. But the markets are now trading at basically starting to push into 3 standard deviation territory above the 50-day moving average. Again, that's not uncommon. It can do that. We saw this previously. The market pushed up here and then just kind of went sideways here for a good bit of time. The one thing to note about this is that just because you get really overbought, it doesn't mean you have to have a correction. It can mean that you can just have a long period where the market really doesn't do a whole lot. In other words, that upside to the market becomes a bit more limited. And that's kind of where we're getting right now. Again, we're kind of pushing up to this very high level. Market is advancing, but it's having a tough time advancing. So that's that overbought condition kind of weighing on the market because buyers and sellers are pretty much matched here at this point. So once we get into February now, February tends to be a little bit weaker month overall. We're likely going to get some type of pullback or a correction simply just because of the deviation that we now have. As we talked about this yesterday, between moving averages, we're just really starting to stretch that rubber band a bit. So as we said yesterday, this isn't surprising how the market's doing, but this rally that started back in October of last year is getting very, very long in the tooth. And again, it's just one of those periods. We talked about buying stampedes and selling stampedes previously, and we're just in one of those buying stampedes at this moment, which is lasting for a fairly long time, and that can certainly occur. But we're going to go through a period where we're going to work some of this off. So as we've talked about, there's really nothing to worry about here to any great degree, but it's certainly worth considering holding a little bit of extra cash, maybe not putting a whole lot to work all at one time. Because again, it's just you're gonna get a better opportunity to put that capital to work. You have to be patient, and again, the problem is that's hard. I get that because every day it's Nvidia is going up or Microsoft is going up or whatever it is. Like, oh, I'm missing out. You may get that pullback at some point and wind up paying more for a position than it's currently priced at today. But the risk reward at that point will be better than it is today. And that's the hard thing for people to understand is that, if I'm buying something, if I can wait for a better entry point, I may actually pay more for it on a price basis, but that risk reward will be better when I do that in my portfolio. So again, just something to consider. Again, markets are fine. There's technically nothing wrong going on, and there's certainly nothing that suggests that as we kind of look at the markets itself, that we need to be concerned about things. But it is worth, paying attention to what's happening in some other areas of the market as well. Gold prices have pretty much stagnated here. So, there was a lot of expectation that there was going to be a big run in gold earlier this year. That really hasn't matured out just yet. We'll see. We'll keep a watch on that. The kind of the big thing to pay attention to is volatility, which remains very suppressed. We're at levels that have typically preceded market corrections of some sort. And again, we're not talking about major corrections of 15 or 20%, but with volatility as suppressed as it is, there's absolutely no concern about a market correction right now, which is, as they always say, it's what the market's not expecting that tends to happen. You've got a good setup here for a bit of a pullback in the markets, in February or at least in March. So again, this kind of goes back to the overall view of just be a little bit patient here. Let the market come back to you. You'll get a better opportunity to put capital to work. Okay, that's what you need to know before the bell this morning.